Hi friends, and welcome to our channel Trading Smart. So the topic that I'll be covering today is the candlestick charts pattern. So it's for the beginners who have started trading recently and who wants to learn more about the technical analysis kind of stuff. Okay, I have got many comments on our videos regarding technical analysis of who told me to show the basics of candlestick chart, because many of our viewers are new to stock market, so they want to know how the technical analysis works. So this video will work as a guide for all of you who are starting to get into trading and wants to know more about how to read candlestick charts. Fine. So let's start. What is a candlestick chart? So you can say it's a pattern movement in prices shows graphically on a candlestick chart. The main uses of a candlestick pattern is to identify trends. Looking at a candlestick, you can identify an asset's opening and closing prices. In simple terms, a candlestick chart shows you the prices movement on that particular time. If you want to see the history of candlestick chart, it was developed in the 18th century by Munichia Homa, a Japanese rice trader. They were introduced to the Western world by Steve Nissen in his book Japanese Candlestick Charting Technique. Fine. Now let's look at a candle, how it looks. The basic candle. Okay, here you can see the basic candle pattern. So this is called the real body. You can see this is the real body. The upper above this line is called the upper shadow, and below are the lower shadow. Okay, this is the basic stuff that you should know while trading a candle. So there are two types of candlestick pattern charts available. Okay, one is called your single candlestick pattern and another is your multiple candlestick pattern. In single candlestick pattern, we'll be having Marubozu, dozy, spinning tops, paper umbrella, in that hammer, hanging man and shooting star. And in the multiple candlestick pattern, we'll be having engulfing pattern, in that bullish engulfing, bearish engulfing, harami, bullish harami, bearish harami, piercing pattern, dark cloud cover, morning star and evening star. So these are the two types of pattern that we are going to cover in our coming videos. So in this video, I'm going to show you on the Marubozu single candlestick pattern. Before we start, there are some points that you should remember. So read this slide properly before you go and start trading with candlestick charts. First is be flexible with patterns, quantify and verify. That means while the textbook definition of a pattern could state a certain criteria, there could be a minor variation to the pattern owing to the market condition. That means when you'll see a chart in a book, that might not exactly be in your live market. There might be some variations, slightly variations might be there in that candle. So always keep that in mind. You have to be very much careful to see, you have to be able to see and quantify that this is the kind of pattern that you are looking at. Next, your buy strength and sell weakness. That is, strength is represented by bullish blue candle, or in this case you can call it a green candle. Weakness by bearish red candle. Hence, whenever you are buying, ensure it is a green candle day, and whenever you are selling, ensure it's a red candle day. That means if you are going to take a trade on a buy side, make sure that your market is on a buy side there for the particular day, and if you're going to sell, hold on to that stock and make sure that your market is also on the sell side same day. Fine. Next, look for a prior trend. If you're looking at a bearish pattern, the prior trend should be bearish, and likewise. That means if you are going to take a position and you're confirmed that your market is going to be bullish right now, make sure that your prior trend is bearish before that pattern. It gives you 95% confirmation that market will going to go on the opposite side. Fine. And the last point to remember is according to the assumptions, history tends to repeat itself. So our candlestick pattern are very much dependent on the history, that we are going to see those patterns that are going to repeat themselves in future. So be very careful when you are seeing any of the signs of this pattern that are repeating themselves. You should know that what is going to happen next. But the market is always very much volatile, so make sure you find out those signs and take the trade on that particular day. Next is a single candlestick pattern. These are the two candles that I'll be introducing you today. One is your bullish candle and another is your bearish candle. In the bullish candle, you can see the same as like upper shadow, the real body, and the lower shadow. So here in the green, you can see the first one is a high, the open price is the below low portion. This is your close one. Similarly, in the red one, you can see the upper shadow is here. This is the high, this is the real body and the close, and this is your low. So these two are called lower shadows and these upper two lines are called upper shadow. But when you go to a live market, you might not see the upper shadow and lower shadow be so much distinctive. It might be there, but it may be in a very small size. So you have to able to quantify that this is a bullish candle or that is a bearish candle. Next, so the candle that we'll be talking about today, the pattern, the single candle pattern that we'll be talking about today is called Marvajo. The word Marvajo means the ball head or the shave head. Okay, so you can see in these two candles, the green one doesn't have any upper shadow nor a lower shadow. What we have seen in the previous slide, you can see this is the upper shadow and this is the lower shadow. But this pattern doesn't create any kind of shadows, neither on the lower side nor on the upper side. So here you can see the textbook defines Marvajo as a candlestick with no upper and lower shadow. So how to trade with this? If you see this kind of candlestick pattern, how to take or when to take trades, right? You can see this single candle involved in a single should have a long real body. Second, there must not be an upper or a lower wick, or that is a shadow. That's all there is. You're looking for a big block without any extraneous limbs or extension. That means if you're seeing this kind of a formation, that is a perfect Marvajo creating on your chart. Thirdly, the single can be white or green or black or red. It can appear anywhere on a chart. A white-green Marvajo moves upward and is very bullish. That is this green one. And the red one is your bearish. The longer the candle is, the more dramatic the jump in the price has been. That means if the size of these candles are more longer, that means the prices are going to move. The variations will be very much there. Next is what you should look for in the chart. Depending on where a Marvajo is located and what the color is, you can make predictions. So these are the main important factors that are going to affect or that you have to keep in mind while taking a trade using Marvajo chart pattern. First is if a green Marvajo occurs at the end of an upper trend, a continuation is likely. I'll be showing you with examples, all the 4 below. Then the second one is if a green Marvajo occurs at the end of a downtrend, a reversal is likely to happen. Then third, if a red Marvajo occurs at the end of a downtrend, a continuation is likely to happen. If a red Marvajo occurs at the end of an uptrend, a reversal is likely to happen. However, because these conjunctions fail to provide 100% certainty, it is always best to confirm your suspicions by watching the candles that appears after the Marvajo. So I'll be explaining you to the next slide. So the first one, you can see the first one is if a green Marvajo occurs at the end of an uptrend, a continuation is likely. So here is a chart. You can see this is for Bank of Baroda, 14th June 2017. I have given the time as well. That is 10:30 to 12:45 p.m. So here you can see this is the green. This is the circle. You can see this is a Marvajo candle that have been appeared here. And as per our rule, yes, the market have. After you can see this is also green and then it came and went up. So this signal shows that the market is continuing on the same direction, that is uptrend. The second was if a green Marvajo occurs at the end of a downtrend, a reversal is likely. So this is again Bank of Baroda 20th June chart. You can see here a the prior trend is your below, that is, you can see that this is downtrend. Here the Maravaju have appeared, and then you can see for the same day it was till end, it doesn't change much, and the next day while opening there is a uptrend. So as it said, a reversal is likely to happen. It did happen, but on the next day within 10 a.m. So the third, if a red Maravaju occurs at the end of a downtrend, a continuation is likely. That means you can see from here to here it is a downtrend, and here we have that Maravaju candle appearing, and after that you can see it is going on the same direction, and it is confirmed. The last one is if a red Maravaju occurs at the end of a uptrend, a reversal is likely to happen. So if from here you can see it's an uptrend, and here you can see our Maravaju. As the first rule we said, you have to able to quantify and verify that this is a perfect Maravaju. Here you can see the long body, there is no lower shadow, but there is a small upper shadow here. So just make sure if it is it should not be long enough like the green one, first one. If it is small this much enough, and your the body of the candle is very much long, you can take it as a red Maravaju, that is your bearish. And you can see after this the trend have changed, and the stock market the prices have fallen down to till here. And this is SBI stock on 1st June time. This is 1:05 p.m. and the prices have been fallen on 2nd June till 12:30 p.m. So you can take positional trades using Maravaju as a indicator. So points. So what are the points that you should remember while using Maravaju? Do remember this: once a trade is initiated, you should hold on to it until either the target is hit or your stop loss is breached. So this is very much important, that when you take a trade, be confident on the trade, and don't use this single candlestick pattern only. Use another technical analysis tools as well, like EMA, SMA. I have showed in my previous video how to use EMA and SMA, so you can see those videos and can understand how you can use EMA with candlestick pattern. The more you will learn about the candlestick, and you should combine them with other technical analysis tools, and so that you get at least 85 to 95% of correct results. Fine. So just go through this. You can see all the points that you should remember, and make sure that you are following them strictly. So next videos I'll be bringing roses, pinning tops, paper umbrella, and all of the other candlestick patterns. So thank you for watching. Don't forget to like, share and subscribe, and I'll see you guys in my next video. Bye bye.